That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surabhi and Nigel here in the studio, and we've got Mangalam Maloo in the newsroom. What a comeback, right, for the markets. The morning was so very quiet, and now suddenly we're up close to about 100 points on the Nifty, almost there. The Sensex too is surging in trades, and the banks. Look at the banks. The Nifty Bank is up close to about 500 points, and that contribution plate will tell you the entire picture. How names like ICICI Bank, the good news, the relaxation on HDFC Twins has provided that further fillip in the market. So in fact, ICICI, HDFC and HDFC Limited, these three are contributing almost 2/3 of the overall Nifty gain today. You know, the good part is that these stocks like ICICI, HDFC Bank, HDFC Limited and Reliance Industries together have a weightage of 35% on the Nifty. These stocks have some positive news going for themselves. The other big pocket in the market is IT, 15%, and IT has stabilized. And it appears the worst, at least for the near term, maybe behind IT in terms of the price action. So if you combine the good news on the banking names plus Reliance and IT, we're talking about 50% of the market, which actually is in a stable to a positive environment. And that's really providing that fillip right now. So Europe is not doing too much. I think the last time I checked, Europe was absolutely flat, a bit of a negative bias, but propelled by the banks.
Earnings.
And the earnings the tide is turned from negative, and we're now getting good numbers.
You know, I get a little scared before making these kind of statements, because just when you make them, things again change for the worse. But yeah, for what it's worth, I think the ICICI Bank rub-off is very evident on a lot of stocks now. Whether you're looking at an Axis Bank or an SBI, even Indices numbers will talk more about them. You can argue that, okay, net interest income is about 40 crores short of the estimates, the CNBC-TV18 poll, but asset quality is stable, provisions are stable. The real meat will only come once we know the margin profile and the loan growth details, deposit and loan growth details. So we are waiting by for that. But otherwise, banks really are leading from the front. I just thought I'll put the stats out there. For this month itself, the Bank Nifty is up about 5%. The PSU Banking Index is up over 6%, 6.8 actually to be more precise. And the Nifty itself is up about 2%. So banks have been the leadership sort of sector for the market for the last couple of days. One final point, Nigel, and your thoughts on this. I know you've been looking at levels in the FNO market as well. This move obviously is fantastic. The fact that we've managed to go above 17,700, we seem to be stabilizing there at least for the time being. That's the high. That's the high of the April rally. Remember the 9 consecutive days of gains that we were talking about? It ended there from that level, 17,863, and it turned. So I thought I'd just put it up there saying that we're still a little distance from that mark. But I guess the bulls will take today's performance with both hands.
Well, that's right. You know, earlier this morning, I put out this point that, 35% of the index, as Reema said, will react to positive news flow. So those stocks are unlikely to move in the red, which is great. And IT stocks, as Reema mentioned, they as well are giving some bit of backup. So that's good news, right? Now, the Nifty Bank, that crossed the 42,600 odd mark. Last week, we went to that level and we saw a bit of a U-turn. Very, very important that the Nifty Bank holds above this 42,600. It's the highest levels we have seen all the way since January 25th. So it's a 3-month high that we're looking at on the Nifty Bank. At the end of today, you'll want it, to end at these elevated levels. And just take a look at it. When the Nifty Bank started moving, that's when the Nifty as well got its legs. And that's why the Nifty is now holding above that 17,700 odd mark. But guys, for the time being, the Nifty, maybe it goes to fresh all-time highs. That's an entire move of around 5%. I think at higher levels, though, the index will find it difficult, say, to get past that 18,500 or 19,000 mark, if in case we need to move up. The real action is going to be in the broader markets. And today it's heartening to see, after the mid and the small cap indices, they started off in the red. Now the small caps are outperforming what the Nifty is doing. So that means portfolios are feeling good. I'll tell you what, many on the street will say, you can keep talking about the level on the Nifty, but it's going to be at most closer to around 19,000 odd. The place where you're going to make big money is in the broader markets. And the small cap index up close to 6/10% after seeing a good bounce in April. That's heartening. The options data, though, it's very, very interesting. At the start of today, we're looking at the 17,600 put. That had a good amount of open interest built up. And currently as well, it's added close to around 50 lakh shares, which takes the total open interest to around 1.37 crore. But what is even more encouraging is now you're seeing the nearest possible strike, which is 17,700. That's added 72 lakh shares. And currently for the expiry on Thursday, it has 1.6 crore shares, which is the highest open interest across all series. So that's telling you that those writers, they believe that maybe in fact the base of the market in the near term, that's the next 3-4 sessions, it's moved up to around that 17,600 odd from around that 17,500. That's the options data. Let's see whether or not it holds out. But for the final 60 minutes, the IndusInd Bank numbers are in. Abhishek will be joined to tell us a little bit more about it. We need to close above that 42,550 to around 42,600. That's what will give the bulls a bit of a chance tomorrow to come in and try to get past that hump of around that 17,800, given that tomorrow we have the financial Nifty expiry as well that plays out. We're currently seeing a 130-point downtick from the day's high, so keep an eye out on the Nifty Bank. Mangalam, what else?
Well, Nigel, I'm looking at a bunch of mid-caps, and that's where I guess, we're looking at big gains coming by. The mid-cap index actually is just about underperforming the frontline indices, up about 1/3%. But beneath the surface, all these, railway stocks, RVNL up 11%. We are seeing big moves come by in Ircon and Railtel as well. Both of them up around 6 to 7 odd %. But then a bunch of other infra names as well. Usually the stocks that do well when the small cap index is doing well. So we have big moves coming in. Power Mech projects, that one's doing well. TD Power up around 5% as well. India Bulls Real Estate as well. Something's definitely cooking out there. The stock up 13% and huge volumes piling up out there. So, the advanced decline ratio as well as the mid-cap index at an index levels, the moves that we're seeing aren't telling you the entire picture. The big moves coming by in a large part of these cash market stocks and a lot of these sectoral moves which are taking place right now. So, good moves coming in the mid-cap end of things. The Nifty 17,700. Let's see where we go from here.
Mangalam, looking really hard to spot those mid-caps. Now we have a new look now with the glasses, is it?
Yeah, because for the last 3-4 days, I think the Nifty wasn't doing anything. And I thought maybe
so you put on the glasses to find the stocks.
And that's where they came in handy, I guess.
That's Mangalam Maloo changing his look as the market mood changed.
Repositioning himself, I think, Bagla.
Well, I have to give credit to Reema. The other day, in the morning, I was just trying someone else's glasses, and Reema said, "Oh, you should wear them." And I said, "Okay, that's a great idea." Then maybe I went over the weekend and bought them. Mind you, these aren't numbered glasses, so these are just for the look, I guess.
All right, Reema, what else are you suggesting?
I think let the market digest this. Let us and the market digest this.
All right, let's do that.
We'll look at incremental changes in a bit from now.
All right, let's get back to the market action.